What's going on, everyone? Jerome Powell did not come and save the day today. He basically he basically said that in March they're going to stop asset purchases and most likely begin to increase interest rates in March as well. So in today's video, I'm going to talk about, from a technical standpoint, what is basically going to happen, in my opinion, moving forward in the markets. I'm going to talk about the SPY, the NASDAQ, the IWM, the 30-year bond, which is very, very important for the overall market. And then, of course, we're going to talk about the crypto markets. All right, so without further ado, let's get started with this video. So number one, I alerted 2 trades today. I alerted a lotto call right before the FOMC meeting, and a lot of people took them. And then I ended up closing for 50%. A lot of people closed for a lot more. And then we ended up buying calls once more at the SPY when the SPY was at 430. And the reason why I did that is because if we had closed below 430, that would have been the first time in history that we closed 6 consecutive days outside the lower level of the B band. And I had a feeling that if that were to happen, we would rip to the upside the next day. So I didn't think that that weakness was going to sustain itself. So that's why I alerted those calls. And they ended up going for 25%, took some profits, and now I'm swinging a small position overnight. All right, so number one, all right, Jerome Powell, Papa Powell did not come to save the day. So during his meeting, what he said was this year, during his statement, he said that this year is going to be a year of going back to normal in terms of, not having as much asset purchases, the Fed balance sheet reducing, and stopping asset purchases essentially was one of the main things. And he said that they were going to only hold treasury bonds. So it's not the corporate bonds that basically are the reason why the market was skyrocketing, right? So during his statement, like his speech, he said that they were basically going to stop in March. They were going to stop the asset purchases in March, and they would increase interest rates multiple times this year, starting in March. And then a questioner asked him and said, he basically asked him to reassure everybody, whatever. And then Powell basically said, things can still change because they're still going to meet a few times. And until March, they're going to meet a few times. He said that they're going to meet at least 3 more times, apparently. And if there is like a condition that needs to be met, they're ready to be flexible with the market. So that's like a very open-ended question or open-ended answer. But essentially what they're really gearing towards is that this year, for sure, they're going to stop asset purchases unless there is a huge capitulation or some reason for it not to, be stopped. And one of the reasons why the asset purchases were, there to begin with was to sustain economic growth. It's not to sustain the prices in the stock market. So that's something that we have to really, moving forward, we're going to have to detach ourselves from any sort of biases and trade the markets as we see them. So the SPY, right? So we were holding on to calls yesterday because we were at a historical, downside extension, right? In yesterday's video, I was saying that it makes sense to go long here. And then it would make sense to go short at this resistance level and then re-short the market. Because I was saying, even if I said this literally in yesterday's video, I said, it makes no sense to be a bear down here. If you're bearish on the market, it makes total sense to buy this dip and then re-short at this level of resistance. And that's basically exactly what happened. I didn't alert the shorts, so I'm not going to take credit for anything, but I said it in the video, and I was just glued to watching what Powell was saying. I was looking at his body language. I was trying to understand all the questions and everything. I was just in awe. And this is like a really historical event. I wasn't too worried about price action at that point. So it's really, I was having a lot of fun today, to be honest. So yeah, if you went short against this resistance level, this just verifies the importance of this level moving forward. All right. So if in the future we come back and retest this trend line, it's going to be very, very important because essentially, if you had gone short against this level, you would have made a lot of money. But instead, we went long against 430 and made about 25% gain. So now moving forward, this can become, a bit worse for the market. Obviously, the Bollinger Bands are falling very, very heavily here, right? And when they are falling heavily, that means that there is much more room to the downside for us to become oversold on the Bollinger Bands, right? So there is that. The other thing is that the RSI is oversold, and the MACD is pretty sharply moving upwards while the market is red. So that is a bearish sign, and the Bollinger Bands are also a bearish sign. So immediately, it looks like the market could fall lower. And if we do fall, so ideally, what we want to see as bulls is we want to see a very large move to the downside. Because usually when there are huge moves to the downside, intraday, there are huge moves to the upside. There's huge snapbacks. But right now, so moving forward in the next few weeks, if the Fed maintains its position that in March they're going to stop asset purchases and they're going to start beginning to, increase rates, then 100% there is a macroeconomic change in the policy of, the Fed. So once there is a clear macroeconomic change in the Fed policy, then it's, all of these dips and everything like that, they're going to be much more risky to buy. So we're going to have to be way more cognizant and careful with all of these dips. So everything, like in the past, every single one of these dips that I made videos about, posts about, that we all made a bunch of money on over and over and over again. If the Fed stops asset purchases, these dips are not going to be as easy. So keep that in mind moving forward. All right. So now SPY has some more room to the downside, but I am holding some longs overnight. Key level of support on the SPY is going to be 427. If 427 breaks, we can quickly fall back down and retest these lows here at 420.76. So keep that in mind. There's that for the SPY. Let's go ahead and take a look at the IWM. The IWM looks terrifying because, number one, the RSI is falling, right? But the MACD is moving upwards. Yet this was a red day. So that is very, very bad. And the fact that the IWM looks this bearish is basically telling me that if it continues falling very, very heavily, which this is basically indicating, that the SPY can potentially, fall down heavily as well. So that is, this IWM falling like this is very, very scary. And it looks like we can come back and retest this very important trend line that I have over here. So this level, essentially, very, very important level, I made it really dark, is approximately going to be around 190 tomorrow. So if just wait to see if the IWM comes and retests this level. If we break this level, then it's time to go short, because it just technically this is not a good sign that the MACD is about to cross above, yet the price is falling lower. All right. So all in all, we can also see that it failed at the 201.50 level, and clearly. Anyway, yeah, this is just not a bullish scenario for the IWM. You could also see that today it was the biggest loser. Yeah, just really be careful moving forward. Patience is the number one thing in this market. We made a lot of money this year. Do not give up all of your gains trading the same way that we've been trading for the past year and a half. All right. It's our job as traders to adapt to every single market. And if we don't adapt, then that's how we lose the most money. All right. So there's that. 193.50 is going to be huge support on the IWM. If that breaks, then it looks like most likely we're going to come back and retest this 190 level. All right. So there's that for the IWM. Let's go ahead and take a look at the large tech stocks, the 30-year bond, and the NASDAQ. All right. Taking a look at Apple, the RSI is still not oversold. Terrifying. This is not a good sign. Although we are a bit green today, whatever, we stagnant in terms of where we closed, whatever, but the RSI should at least become oversold soon. All right. But we have earnings tomorrow. So it's going to be really, really interesting to see where Apple goes. The MACD is crossing upwards, yet the price is moving down. Essentially, it's it's not a bullish sign either. So Apple still has more room to go to the downside. You can see that it held this lower standard deviation perfectly today. So there's that on Apple. Still see more downside. Microsoft opened up really strong, and obviously with the rest of the market falling, it broke through all of these levels of support. Not much to really take into consideration with the indicators, but currently 297.97, essentially 298, and then 301 are going to be very important levels of resistance for Microsoft. Not as much there. Google clearly came back, retested this level of resistance at 2660, failed, and now here we are. So it also has earnings soon. The RSI is moving upwards, which is normal because we are green, and the MACD is pointed upwards very slightly, which is a good sign. All right, so we need to see if this bullish momentum is basically only there because it's about to have earnings, because prior to earnings, many stocks usually look bullish. So let's see if this is a recreation of that. 2660 is a major level of resistance. Look at Amazon. Amazon really pooped the bed. So it's closed outside of the lower level of the B band again. So 1, 2, 3, 4, 5. This is the sixth day that Amazon closed outside of the lower level of the B band. We know that retail is taking a hit. Shopify was taking a hit. Overall, that entire sector is taking a hit. The MACD is moving upwards, yet the price is falling. That's another terrifying thing. And the RSI is extremely oversold. So, Amazon looks pretty weak, and it can continue falling. So overall, all of the tech stocks look like there's still more room to the downside. And obviously, if the largest tech stocks are showing weakness, then most likely there's going to be continued weakness in the NASDAQ as well. Also, Tesla just had earnings. It fell to 888 in the pre-market. I think it fell to 880 in the after hours, and now currently it's at 914. So it obviously didn't have good earnings. So that might not be a good sign for Apple earnings on Thursday. So yeah, take that into consideration. Now let's go ahead and take a look at the 30-year bond. Oh man. All right, so the 30-year bond. Clearly, currently we can see that it's at this very important level of support right here at 153.29. But now, what I was saying yesterday was, so the bullish case scenario yesterday was if we maintained and just consolidated a bit at this area here to give enough time for the MACD to become oversold once more. But what is happening now instead is we're falling very, very sharply because this MACD is this overbought. When the MACD is this overbought, it's generally a very, very bearish sign. So if we break down below these levels of support, etc., the entire market is going to have a new low. And the 30-year bonds breaking like this is very, very important to the rest of the market's pricing of equity prices. So we have to watch now if 153 breaks. If 153 breaks, which is this prior low here, and if we close today below this level, and then in the next coming days we break down below this level, it's going to be very, very very, very bad for the NASDAQ specifically. And then obviously because the NASDAQ and a lot of tech stocks have weight in the SPY, it's going to be bad for the rest of the market as well. So if you want to go long, right? So automatically right now, very, very bearish for the 30-year bonds. It doesn't look good at all. This needs to work off of its overbought condition. And if it does not stop falling at this rate, it can easily come back and retest this 150 level. So it's in our best interest to either lean short or just be patient and buy heavier dips when things are very, very overextended to the downside like we've been doing. All right. So this looks very, very bearish. Also, if we analyze the RSI, we can see that back here when the RSI was oversold, we're basically almost very similar to that same price. Yet currently the RSI is not oversold yet, which is basically showing that there's still more room to the downside for the 30-year bonds. There's multiple things that are basically saying that there's more room to the downside, and of course, you know, if the bonds fall, then the NASDAQ also falls. So, you know, just keep that in mind now. Now let's go ahead and take a look at the QQQ. All right, number one. So here's the NASDAQ. We can see that it held 340 well, right? This entire zone here between 338 to 340 is a lot of support for the NASDAQ. And we came back, retested this support level perfectly, right? Now, we can see that the MACD is moving upwards, yet the price is falling. All right, so that is also super bad. So that is also telling me that there's more room to the downside. Unless we can break above 345 or 350. Unless we break above solid levels of resistance, then this indicator moving upwards is very, very bad. So we need to see some sort of a movement upwards in the market soon, or else this is basically telling us that all of these retests of resistance over here on the SPY at 430, 443 and 444 were just really, really good shorting opportunities. So unless the market begins to turn upward soon, then coupled with the weakness that we see in the bonds as well as the overall indices and their indicators, means that the market is going to fall lower. And if we fall even lower and we break down below these lows, I'm going to be very bullish. Yeah, essentially we're just going to, most likely what's going to end up happening is we're going to buy dips as we fall lower and lower and more overextended to the downside. So that's basically going to be my thesis. When people are the most bearish, and imagine what's going to end up happening to people sentiment-wise as we break down below these lows, people are going to be super, super bearish. So, I mean, obviously we have to take it one day at a time, but this is, right now, this is a very bearish scenario for the entire market, with everything considered right now. So yeah, the RSI is still oversold. We held this level of support, but unless we can break above 345 and then 350 on the NASDAQ, it still doesn't seem bullish at all. All right. Also, given the fact that all of the other tech stocks are still showing weakness as well. So yeah, just be careful. And there's my analysis for the overall stock market. Oh, actually, currently, right? You know what? Never mind. Let's just wait to see if we fall down lower. So yeah, there's my analysis for the overall stock market. Now let's go ahead and take a look at the crypto market. All right, so here's Bitcoin. A good indication, a good explanation of basically what I'm saying in terms of the MACD moving upwards is the fact that Bitcoin's MACD is moving upwards like this right now, right? So Bitcoin's MACD is moving upwards, yet the price of Bitcoin could not break above any key levels of resistance, and it doesn't look like it's going to close anywhere above key levels of resistance either. So with the price moving upwards right now, yet it looks like we're about to close red, is bearish. So we need to see now if we can't hold 36,200 and then we break down below 35,500, it looks like we can come back and actually give a solid touch to this 32,653 level. And currently right now, because we are moving up so aggressively on the MACD, yet we're not closing above any major levels of resistance, it is highly likely that we do come back and retest that level. So I would just be very patient. It doesn't look good for the crypto markets at all right now either, as well as the overall stock market. But if you want to buy into options longer term, obviously, you know, that's a completely different thing. But in the short term, it looks like we're going to get a solid touch of this level here towards 32,500. So overall, you know, obviously as Bitcoin falls, then the entire market is going to fall as well. So I would really, really continue to monitor and just be patient on the crypto markets as well, because recently the crypto markets have been a good indication of the bullishness of the stock market as well. So people have been keying off of the crypto markets, because the crypto markets are open 24 hours, right? So if the crypto markets were bullish pre-market, then that was a good indication that the stock market would be bullish as well. So yeah, I mean, we have to monitor that pre-market. So it's a good indication if you just, open up your phone every morning, look, okay, is Bitcoin green? How much is it green? Did it break above any major levels of resistance? Blah, blah, blah. Currently, there is a strong correlation between Bitcoin and the SPY. So I would definitely monitor that. And I hope you guys have an amazing day. I will definitely see you guys tomorrow. Thank you.